Hello everyone and welcome. So today's video I'm going to be talking about why is the market still going up when people are losing their jobs left and right and people are losing their businesses left and right as well. Now, to put this into context, in the United States, more than 20 million people have filed for loss of jobs within the past 4 weeks, and this is almost 10 times as many people that filed for job loss compared to the recession of 2009. Now, in New Zealand, because of the disease, it is expected to have more than 67,000 job loss. Now, with all these job loss and like bad news coming out, why is the market still going up? Now, there's a couple of different possibilities for that happening. And for the US itself, the US has passed a $2 trillion stimulus bill to help prop up their economy while everything is going into shutdown mode. The Fed is also giving big corporations these unsecured loans to corporations such as airlines and automakers, and it is left up to the taxpayers to pay up this bill in the future. But what about in New Zealand? What is actually going on here? We have a historic decline and then the market just suddenly bounced back up. Now, in the case of New Zealand, so this is the Smart Shares New Zealand Top 50. We can go and have a look at the companies that are actually in the Smart Shares Top 50. So the Top 50 itself is heavily skewed towards like the top 5 or 10 companies that are in the top 50, and the top 5 companies include Fisher & Paykel Healthcare, which has around 9% of the New Zealand top 50, and also A2 Milk, Spark, Meridian, and Contact Energy. So even within the top 2 itself, with Fisher & Paykel Healthcare and A2 Milk, these 2 companies take up about 15% of the New Zealand top 50. So even if the other little companies aren't doing particularly well, as long as these couple of big companies are doing relatively okay, it may seem that the market is still going up. So why don't we have a look at these top companies? So let's first have a look at Fisher & Paykel Healthcare. So this chart is from the beginning of the year. Now, Fisher & Paykel Healthcare obviously make healthcare products such as respirators and other things that can become quite useful recently. So since the beginning of this year, its prices has pretty much kept on going up. I mean, what recession? There has not really been a recession that's happening to Fisher & Paykel Healthcare. Well, what about A2 Milk? So A2 Milk is a dairy company that basically exports a lot of their products such as milk powder and related products overseas. And they have been not particularly affected that much by all the shutdowns that's been going on recently. So this graph is also from the beginning of the year. So A2 Milk has basically been on a constant uptrend and has just reached a new all-time high not too long ago. So with these companies still doing reasonably well, it's kind of giving a false sense of belief that the market is doing really well as well. So in the previous video, I've looked at the possible resistance for the New Zealand top 50, and that was around the $2.60 to $2.66 mark, which was around this level, and it coincides with the 50% retracement level for the Fibonacci, which is around 50% here, and the 10-year historic bull market trend line, which is this orange line here. Now, what has happened is that the market completely shot through the resistance level all the way up to, what are we at, $2.80, and then it started coming back down again. So the market has been going up following the trend line, and now it's starting to break the trend line and started going back down. A possible indication for that is if we look at the RSI indicator, which shows a buying, selling momentum. So for an RSI indicator, when the value is above 70, the stock is considered as overbought. And if the value is below 30, the stock is considered as oversold. So when we hit the 70 mark, it is pretty much exactly when the stock starts to sell off. Now, RSI is not a perfect indicator by any means, but it is an indicator that a lot of the traders like to use. So when we look at the Fibonacci retracement, instead of retracing at the 50% mark where I was originally expecting it to go down, it hit the 61% mark before going back down. So New Zealand has just announced that it is going to go down to level 3 in the news. Now, what I find very interesting is as I was watching the news, I was paying attention to the market as well. Now, as soon as the news broke that the New Zealand is going into level 3, the market immediately starts selling off. Now, I find all of those very interesting because what a lot of times markets believe that what's going to happen is better than what actually happens. So a lot of times the market is built up on a lot of hope and optimism. So when people are looking forward to something, the market keeps on going up. When the thing that they were looking forward to actually happens, people start to sell off, which is exactly what happened here. So what could possibly happen in this scenario? So if you believe that the worst on the market is already over, you can potentially look at the 50% mark as a possible support for you to buy into the stock, so that it will bounce off the 50% mark and then go into an uptrend again. Now, personally, I believe there's still more downside to come, so I am still bearish in the short, medium term. So I'm still looking at how the market will react to the news coming up for the market to break more further into the downside before I start looking to pick up more shares, maybe around this region. But that is my personal opinion only. Please do not use that as financial advice, and make your own informed decision about what is going to happen. It's entirely possible that the market has already priced in all of the bad news that has been going on, so that the market is basically going up again, back all the way to all-time highs. Although personally I think that this scenario is still extremely unlikely. A more likely scenario is if we kind of chop around a bit within this region, or alternatively we break further to the downside, which is probably more of what I am expecting. So let me know your thoughts and opinions on this and how the general market is going. I would love to talk to you. Be sure to subscribe to the channel and give this video a like if you like this type of content. I hope everyone stays safe during this time, and I will see you in the next video.